1.
Shh. Be very, very quiet. We got a TLT and a bond rally going on. We don't want to be too loud and awaken the bears ahead of the PPI report. Blue Putnam 815 is going to put it all in perspective for us. ExxonMobil makes the deal. It is a big day. It's Wednesday. It's pre-market prep.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elkanin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right, good morning, traders and investors. We're off the highs of the pre-market session, but still up 1150 at 4403, trying to recapture that 4400 level. Buck is up a few pennies at 105.59. Bonds, as we talked about, up 1 in 10/30 seconds, over 113. Crude just not following through on that big rally for Monday, down 60 cents at 86.37. Gold catching a bid, trying to get over 1900. That's up nearly $10 at 1885. Silver finally overtakes the 22 handle. Resistance now up 23 cents at 22,190. And Bitcoin futures down $185 at 27,305. Bring in Triple D. Triple D, we have come to these moments before.
Yes.
We've sold off and we get optimistic and then a rug pull. And once again, we face that today with the PPI numbers, CPI on Thursday, earnings on Friday.
A lot of potential catalysts to take us in both directions here. One thing we do have going is a significant bond rally. The TLT flying high, and I've been trying to figure out, but it may be my fault, Joel, that the TLT is flying high. I just realized I got a fat finger here, and I had my finger on the TLT buy button here, so I got the fat finger. I got myself on a piece of metal just literally before the show started. But anyways,
did you get shaken out of
joke.
your TLT? Did you get shaken out of your TLT?
No, I'm still in it.
Oh, really?
Yeah, and I'm not up much. I bought, I think, at 87, so I'm just getting back into the green here now. I also bought that Canadian bond. I also bought, what else did I buy that day? I bought 3 things that day. I think the Laurentian preferred. No, not the Laurentian. The LB, because the symbol is the L.
You bought the Woblo.
PRB. So the Loblaw is preferred.
Yeah. Okay.
So that day I was like buying bond stuff, and we did go down after that, but we haven't really went down much since then. I think you kind of had a shakeout here. All depends on PPI, CPI. That's going to dictate the next course of action. It's all about the data.
Yep.
And we will be getting PPI today. How we doing, team? Of course, we'll give core PPI month-over-month estimate. We have at 0.3 last month, 0.2. And so we're going to be looking to see if this has gone down a slight amount. Year over year, 2.3, prior 2.2. Of course, we also get the FOMC minutes today and a couple of Fed speaking that will be out there. So watch out for the Fed speak. And of course, FOMC minutes, I don't expect to see anything that's surprising. But of course, something that we need to be watching, right? That's going to come out at 2 p.m. Eastern. Don't miss that. That comes out right from the Fed website. I'll give you guys the link if you guys want to go ahead and check it out later today. But let's get into the deal of the day. Of course, ExxonMobil agreeing to buy Pioneer Natural Resources for $59.5 billion in an all-stock deal, or $253 per share. As part of this agreement, Pioneer shareholders will receive 2.3234 shares of Exxon for
Slow down, give me that number one more time, because you risk
Dennis
traders.
Needs
it's gonna be a fun deal to trade. This is gonna be one I'm gonna trade.
All right, you ready?
Yeah.
2.3234.
2.3234. Okay.
You got it. Shares of Exxon for every Pioneer said that its production volume would more than double 1.3 million barrels once this deal was closed. The combined capacities of our two companies will provide long-term value creation. well in excess of what either company is capable of doing on a standalone basis. This came from ExxonMobil's CEO, Darren Woods.
A deal we thought PXD might get bought by somebody. Then obviously the rumors materialized last week, and now the deal goes off the board. Decent premium again. When it's an all-stock deal, they typically do knock the acquirer down. I did short ExxonMobil last night. This broke like about 3 minutes before the close, Joel. It was just started breaking where there was rumors. It wasn't official, but Bloomberg broke the rumor that this could be coming. I was able to get short ExxonMobil just a little bit down, 110.25, I believe. Covered it already here this morning, just assuming that the acquirer is going to go down. They ripped PXD. The algos are like all over the PXD. They ripped it up to 245, but obviously you're buying 245 last night. You're not making money here now because they're knocking the XOM down. Now these two stocks are going to be linked. So do I think this deal is going to go through? Yes, I do. Do I think there's any trust issues here? Slight, maybe, but there's so many oil companies. I think this deal's going through. I think PXD will eventually be ExxonMobil. I think I'm going to trade this. I love trading the risk arbs. The merger.
When this broke, I saw it again when I was out last week, and I was trying to do the air math on it, and and I came up, the 60 billion of value. I don't even know what math formula I used, but I came up with like 257, 258, which is a little bit lower. And and then I saw you tweet it, or said it on the show or something around that same price. So they're leaving a little, meat on the bone here if you wanna play it from that way.
Well, they're
Also,
not, Joel, because it's a stock deal. So you've got to go and do the merger. So let's teach this. It's a good teaching tool.
Do you
here.
want to do it today?
Calculator.
Okay.
We take the current price of ExxonMobil, not the closing price, because if you take the closing price, you get a different price. You got to take the current price. So 107.70 times the ratio that Money Mitch just gave us, 2.3234, gives you 250. So they're leaving a little bit of meat on the bone. 250 is the actual price right now on this.
Okay.
So it's an 8-point discount. But there's multiple considerations here. The big consideration is the time value of money. So we're not sitting here at zero anymore. It's 5.5%. So the longer this takes. So they're only knocking it down basically 3.5% to 4%. So you do have a risk that the deal doesn't go through. You do have a risk of holding it and takes longer than anticipated. You will probably get a dividend from PXD, which may make up from the time value of money. Their dividend has always been, they move it around. I think they have one, a small piece that they pay every quarter, but then they change it. So it's unpredictable to a certain extent, the PXD dividend, depending on profitability. But they are trading it at a slight discount here. But I don't know if you're coming in here and buying it for that slight discount. I'm more in about the linkages, trading ExxonMobil versus PXD.
Okay.
So,
all right. We could also do it another time on, talk about the specific executions. A big buyer or a big seller comes into those stock that's not really paying attention to, or does not care about
push
the
price
deal.
out from where it should be.
They just want in. They want it. Like, I don't want to own ExxonMobil anymore. They're doing this big acquisition. Boom. That's where you get those.
And I mean, the high freaks have this pretty whipped, so it's hard to really make a lot of money on the risk arbs trades. But back in the day, and I still do them, but obviously I'm pretty quick too. But back in the day, like I can remember exclusively trading just risk arbitrage. So two companies merging together in all stock deals, I just traded the spreads. And they, like you said, a big order comes in, pushes one price out, the other one doesn't adjust quickly enough. Again, they adjust pretty quickly now, but there is opportunity still there. They're just really very, very quick.
Quick technicals on the ExxonMobil. You're getting a gap fill, right? I'm from that big oil day on Monday. So we'll keep an eye on this bar, this big bar here, and from Monday, and see if it can settle down someone here. The top of the gap is 108. We're already filled that. Don't think we're going to be, we may see the low of the session here, 105 or from Monday, but keep an eye on that bar. Monday's bar, important for ExxonMobil.
BP has increased its core earnings guidance for 2030 by $2 billion. They now aim for EBITDA to be in the range of $53 billion to $58 billion when oil prices are at $70 a barrel, up from the earlier forecast of $51 billion to $56 billion. This update was announced during an Investors Day presentation in good old Denver.
I mean, oil's come all the way back up here. BP's all the way back up to where it was just because obviously the war situation. But you got all kinds of resistance up here. Come and buy BP now. You're doing it backwards. It's all the way back up at resistance. Some of these oil stocks have come back up to resistance here. It depends again. Now, PPI, CPI could change everything here in the next 24 hours as we're going to get some major inflation data. But I think that I'm not jumping in here and chasing oil here. I'm not coming in here and buying BP at major resistance.
Okay, how about this price action? Just because Dave Lawler to leave the company, a top BP executive, on this Friday. Look at that. The old executive leaving trick. It must have been they pounded right to support. Now right back up here. There's resistance in the 39 handle. Actually, let's see. Getting closer to 40. I'll give you last month's high, 39.73. 40 seems like a psychological level too, but actually it's been higher in the year. But that could be a good target today, $40.
The tech giant Samsung is expecting a 78% drop in operating profits in the quarter ending September, according to the guidance released by the company. Of course, they've been stating that memory chip demand has fallen dramatically. Also, what you're seeing there is an oversupply in the market. So two negative things going to memory chips. But Samsung definitely seeing a hit here to their operating profit. How will this affect other tech companies also?
Dennis, I'll let you go with this one because I just I
yeah,
don't know.
Samsung's tough because it's barely traded here, and Samsung has had a world of their own problems, really. So I don't know if you can show a long-term chart on it, Joel.
It's just it's like yuck.
Yeah, it's hard to even look at. It's just all a
Yeah.
mess.
Yeah, I don't even, I mean, this chart looks okay, but like
Yeah.
it's not worth looking at.
So in any regard here, Samsung's just had its own issues. Could we jump in and, derive some other things from this, like a Micron or a WDC?
Micron's up.
Yeah, well, I don't even know what Samsung's doing because it's traded as an ADR over here. So it's impossible to even tell what the hell the thing's doing. You got to go basically into other systems to try to figure out what it's even doing this morning here. Yeah, Samsung Electronics, I've got it down. It's just hard to figure out how the hell they trade this thing. I don't even know what the symbol is. I don't even think it is SNLF. So it's a confusing one already. But I know the stocks that will move along with Samsung to a certain extent are Micron and Western Digi. But they can sometimes move counter to it. They do all kinds of different crap going on in that. So it's a really hard peer play. Like there's so many easy peer plays. Samsung is one of the toughest ones. One, because it's hard to get quotes on it. And then two, is just, well, basically, like there's a million technology companies and they sometimes go opposite directions. I've seen Samsung sometimes go down and Micron rip on it. So it's so much mechanics here that I just don't follow closely enough to understand.
The one chart I would ask Joe to take a look at is the Micron chart. I think that stands out a little bit here. And of course, 71, 72. What do you think about here, Joel? There's some interesting
70.
levels here.
Yeah, I mean, if I was a Micron bull, I'd be all excited. Up 86 cents. Stalled a couple times at 70. Really on Monday, Tuesday, and Wednesday. So you clear 70. I'll make. We're getting a running start into it. Of course, right? What happens with the PPI, but looks pretty wide open. I would not if this market catches a strong bid. This gets rolling through 70, gets a 70 bid. I think you got to hide for cover here. I think you could see 72.
All right, let's get to our guest time today. A little early. Smash the like, guys.
Blue Putnam, the managing director and chief economist at my old working place, the Chicago Mercantile Exchange. Blue, how you doing today?
I'm doing well, thank you.
All right, thanks for coming on and joining the show. So we're doing the PPI today and the CPI tomorrow.
That's correct.
I can't, why?
Well, they just wanted to confuse you. If you get in too much of a pattern, you'll mess up. I have no idea why they changed the date.
Okay. So tell us what you're expecting. Tell us about the Fed, interest rate tool, and what you got feeling on the numbers.
I think these numbers are going to be a pretty much non-event. The headline CPI year over year has been going up. It was at its lowest at 3.0 in June, and it's been ticking up I think that's just about over because that's all about what happened in 2022, the comparison. So we get rid of that. The month over month numbers is what we're all focused on now. And, 0.2, something like that. That's right in the middle. I don't think we're going to get any unusual information out of CPI. The PPI is a little more volatile, and I don't predict it as much, and the Fed doesn't watch it. So neither do I. That's part of the issue there. On the Fed itself, the Fed has really staked out some pretty strong territory about what I call optionality. They have the option to raise rates, but they have ruled out lowering rates. So that's really their message. They're not telling you that they're going to raise rates. And there's a lot of debate. Many of the Fed and Fed presidents and FOMC members feel they've done enough. A few of them are talking about the potential for higher rates, but probably not in November. And I don't think I think they're done for this cycle. Because I really think the interest rates are restrictive. We have the short term, the Fed funds is above the CPI headline. It's above the core. The yield curve's inverted. All those things tell me it's restrictive. We did have the San Francisco Fed talk a little bit about what's neutral. But neutral to me is probably a little lower than where the current rate is. It might be a little higher than where it used to be. But neutral is that's a comment from somebody who thinks the interest rate's a stereo system that you can just dial in a perfect rate. And I'm not in that camp.
Oh no, he can't be. Blue, we got to bring in. I mean, you do your homework, we do our homework, we follow the charts, we follow the fundamentals. We know we're coming into earnings season, and then you have war in the Middle East. I mean, you've been around, you've been through different market cycles, definite turbulent times in the geopolitical situation. Does that change the Fed? Does that change their thinking or their strategies?
It doesn't change their short-run thinking or strategies. The Middle East situation is there's a risk premium moved into the oil market instantly with the breakout of the war. And that's all about Iran. If Iran gets drawn into this militarily, that is, Israel would strike Iran might, whatever, that's Iran has oil. But right now it's just a risk premium. Now, we know that this conflict's going to last a long time. So I think this risk premium will stay with us for a long time. It's about $5, give or take. But it doesn't affect the economy today. It doesn't affect inflation today. It doesn't affect the Fed's targets. So it's not on the Fed's radar right away. But obviously, if the conflict widened out extensively, that would impact the Fed and global growth and things like that. So it's on everybody's radar, but we're just watching right now. We sure don't know.
All right, I'm going to tie a little bit of two things here. Of course, pointing to our consumer spending, which accounts for 60% of U.S. economic activity. We just recently got the IMF to actually increase projections here. What do you think's going on underneath the hood here, Blue? Is the consumer really slowing down? Is this something that we should be concerned about?
I don't think you should be too concerned about it. The consumer is slowing down a little bit. That's okay. But the consumer is going to still continue to spend. Consumers spend when they have their jobs. If they lose their job, that's when they stop spending. But, if they have now they have to some of them have to make student loan payments, they're going to figure that out. And not necessarily all of them are going to make the payments either, but they're going to figure it out. Well, there's kind of an order in how you deal with your credit. You pay your mortgage rate on your house, and you pay for your car loan, and then after that, you kind of figure out what you don't pay. But the consumer still has jobs, and they have a lot of jobs, and we're adding jobs, and that is the underlying primary everything about whether consumption continues to grow. So yes, consumption will slow down a little bit next year, but still be positive enough for positive GDP and no recession.
Blue, where do you expect to see the biggest hit to consumers? Is it going to be on like the big ticket items, like cars, like houses? What do you expect there?
Well, we've kind of seen most of the damage from higher rates. we thought it would hit the housing market, but then we realized that everybody with a 3% mortgage rate wasn't going to sell their house. And so there's nobody selling their house. So, and then we got a little worried about, well, mortgage rates are going up again when the 10-year kissed 5%, but it's already back to 457, 460. So, that's noise. I do think the consumer will be thinking hard about big ticket items. So I do see anything that you have to borrow money for probably gets hit a little bit more than the cheaper discretionary items.
Yeah.
So that's the camp I'm in on that. But it's not a huge effect, but it's there, and it's been there a little bit. So, but every month that we keep these rates where they are, we get a little more effect.
Blue, I want to talk about something I've been talking about on the show, and I want to get your thoughts on is labor inflation. I mean, we see the strikes, we see UPS with a big raise, we see the UAW obviously expanding their strikes. General Dynamics is talking about their, UAW going on strikes as well here, or they're going on strike as well, or potentially. I mean, everybody sees that they're paying more for stuff, and now everybody wants to be paid more. Does that not start a vicious cycle? Like, I mean, if all of a sudden, you got a 40% raise at all the automotive companies, don't they have to pass some of these costs on by actually raising the cost of their products as well? How do we stop that labor inflation? Because that's what I'm concerned about.
Well, labor got behind. Most of the last decade until they were behind on inflation. A lot of the labor deals were cut fairly soon after the Great Recession, like the UAW deal, things like that. So those deals were great for the companies because the economy wasn't too good. So I certainly am not in the camp of blaming workers for wanting to catch up a little bit. Now, your question, though, is who pays for this?
Yes.
And I think this time around, shareholders are going to pay about half the cost, maybe even a little more. The pendulum has tilted away from management, if you will, and a little bit toward workers. And so as that shift means, well, the workers are going to get a little higher share of the profit of the company. That doesn't mean profits don't grow, because one of the things we've noticed is companies have been able to push through price increases and hold on to them. And so their profits have been pretty good. I mean, as we go into this earnings cycle, it should look pretty good. Now, of course, you and everybody else are mainly going to listen to the guidance, and it may not be quite as good because the CEOs are like, well, yeah, we did pretty good in 2023, but man, 2024 looks highly uncertain. So I'm sure they'll keep telling us that. But, your question, I think, we're going to get labor deals that do push wages up. But the shareholders are going to pay a little bit more of that cost than they used to.
Blue, I saw your article on the changing nature of risk management, and I want to, there's obviously, the big boys, the institutions, the pension funds, large investors, they face, a much more difficult task, than the individual investor. And what is it? I mean, the bonds have come down. I mean, I'm not asking for any specific investment, recommendations, but am I happy locking in 5.5%, and I going to be crying when they're at 10, 12%, like Jamie Dimon said? Or what's your perspective on that, and maybe that comment in particular?
Well, there are two things going on with my perspective on this. One of them is the difference between risks that you can quantify and things that are just highly uncertain, particularly those things that could go either way. Does the U.S. have a recession or not? Does oil prices skyrocket or come down because of what's going on in the Middle East, or not? We don't know the answers to these, but they're either or questions, and I call that event risk. And the answers to those questions are highly uncertain. And that makes people a little more conservative in their portfolio management. They may take a little less risk. And to the extent that they stay active, they may use options a little more. Strangles and straddles, things like that can give you a little bit of a hedge on the up or down volatility. The quantifiable risks, the things we kind of think we understand, like what I was talking about, with what inflation might be later this week. Those things we can still manage that risk and still take acceptable risks. It's just that the pendulum here has shifted toward more of the unknowable things, and that makes people a little more nervous. Now, the second aspect that you were talking about is cash. You can get 5% out almost 5 for the 2-year. It dipped below 5% this morning. But, you know, you can get 2 years at 5% plus if you structure your investment. And that's with virtually no risk. That's a treasury.
Yes.
So, you know, cash is back, and it's going to play a larger role in portfolios. Shorter term, people are going to try to take opportunities because there are going to be some opportunities. But I think the longer term investor is going to slightly de-risk and improve the quality of their portfolio. And that means both equities and bonds. And they're able to do that because of cash.
Let's just talk bonds for a second here, because we've had this relentless selling and obviously in the long bonds and the rates going up here. Bring it back to what Joel said. I mean, we even had Rick Santelli talking about, you know, potentially I think it was, I don't know if it was the 10-year he was talking about, it was a 30-year, but I remember him saying 13%, the rate he could hit eventually. Is like, I shake my head at thoughts process like that. Is there any chance that rates are going to go up to 7, 8, 10, 13%, Blue?
Well, you can always put a probability on it, but I would put 0.01.
Okay, pretty low.
There's not much chance. We are not back in the 70s where you get that kind of inflation. The 70s had inflation. Well, it really started building in the late 60s with Great Society programs and the Vietnam War, and it just continued to build for 12 years. All we had was a pandemic surge based on $5 trillion of government extra spending that they gave us, which we spent. And guess what? We got to, but all of that's been reversed. We're not, you know, budgets are going to be tight, particularly government spending. Now, you may look at the budget deficit and saying, wow, that's getting bigger and bigger, and it is. But the government's not spending very much more. It's the interest rate expense and things like that. Right. So, you know, the causes of the pandemic inflation surge have all been reversed. So to me, it's just a question of, do we end up at 2%? I don't think so. 3%, that's where I am. But, you know, these are relatively low numbers. We're not talking 10, 12, 13. To do that, you would need a tremendous amount of government spending. And our government can't do anything. So I don't see the spending coming.
Okay, Blue, we're going to let you go. Blue Putnam, Managing Director, Chief Economist of CME Group, putting inflation terms or the whole situation in very explainable terms. Thanks, Blue.
Thank you.
Go Blue.
Go Blue,
awesome.
indeed. Definitely.
I love that he quantifies that for us too, because, you know, a lot of people talked about it for, it seemed like 3 or 4 days when Rick Santelli threw out that 13% number there, and I shook my head at it. I immediately went to Twitter to say no chance. Blue says 0.01% chance, so he'll give it a chance. But I guess there's always a chance. You know, obviously thinking back to what was the movie? Was it something about Mary, or oh no, it was Dumb and Dumber. So you're telling me there's a chance? Well, maybe.
The old movie, that is a movie I did see. All right, Dennis, go wide.
1 minute. I'm going to just go to the background here. Go wide, 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 because I don't want to get picked off. Remember, even folks, you short-term investors, don't get picked off on these numbers.
All right, guys, remember, we're going to get core PPI to come in here, month over month outlook 0.2 prior, core PPI year over year 2.3, 2.2 prior. Let's see what happens here. Let's see if we get some movement in the market, right? It's kind of a little bit of a weird shift that we got here. You guys heard Joel ask Blue Putnam just now, what happened with these numbers? Why are they flip-flop? Why is the PPI coming before the CPI? And is that like, is there a reason why? Do they know something that we don't know? That's going to be the question we'll be asking ourselves. But the truth is, price action will lead, right? What are you seeing on the price action right now,
0875, 0875. That's your pre-market high. Have nothing there for you. What I do have for you is yesterday's Globex high at 19. So if it's a good number, we'll take it up to 44.19. On the downside here, not much. The closing price from yesterday, 92.25, is snuggled up right against that pre-market low at 43.88. Blue's looking for a non-event here. The algo jumpers are not jumping too much. Maybe they're fine-tuning their computers here. As we no one has an edge here. Holding steady into 4,400 handle. Spies are probably going wide right now. And
all right, news is
first move is down. It's hot. How hot is it, Mitch?
All right, I'm waiting to get it too. Everything's coming in here at the same time.
It's hot.
All right, I'm hitting the refresh button, guys. There we go. Month over month, 0.5 versus 0.3 estimate. Definitely a little bit hot there, showing a little bit of a jump there in demand. I'm going to actually start going through the report here. Joel,
Okay.
let us know what you're seeing on the price action. I'm going to do a quick little dive, and I'll let you guys know exactly what I see underneath the hood.
Yep. Okay. Well, we just lost mid-range on the session. Not a super big level because it's traded to it so many times. It doesn't look like the bids are just disappearing. We've seen that on some different index readings, but it feels like there's a little bit of underneath demand here that like algos are just not ripping it down on a really bad number, which I think this is a bad number. You think they'd be taking out the pre-market low at 43.88. Now that could still happen, but this is a very like order. I mean, you did get that initial spike down, but right now you got a battle between the bulls and what a tight market here. I hope Dennis didn't fall asleep during this. It is just a tight market. Bulls are trying to regain control. I'm looking at the stocks. The stocks are not reacting that much. In fact, I'm not even seeing any ticks in the stocks. Apple just down 28 cents. Apple, your debt-free companies, I'm just not seeing a lot of movement in the equities. Let me go to something like JP Morgan, the financials. JP Morgan on the 1 minute chart. What I have to do on that is I have to get the 24-hour market. JP Morgan actually, this has been all over the place. So this isn't, the stocks are not giving me much of an indication. Let's see what the QQQs did. QQQs are still holding on to their gains. They had a little bit of a spike down. I think what you're seeing is that despite this, worse than expected number, you're still
It's sentiment, Joel. It's sentiment. It's like it's turned, and it has. I mean, that's what we're seeing is like it's a little bit hot. It is hot. But if this report's a week ago, we get hammered on it. But because we have so much underneath demand from all the shorts who have been caught in the last 3-day rally, it's been a vicious 3-day rally. You now have that buy the dip mentality back into the market here. So we immediately bought the dip. I actually did buy the dip as well when we got down to 435 on SPY. I did pick up some SPY down there. Yeah. Just I was actually a little bit unhedged going into it, so I just hedged myself up more than anything. But I think there's just this buy the dip mentality. Now again, let's take this number at face value. This ain't great news. It ain't great news. So does institutional money come in and start hitting this? I don't think I'm coming in and saying I'm buying stocks here right now. An initial buy the dip here to hedge myself up, but I think it's almost like this little pop that we just got where we're trying to get it back here. Makes me more think maybe lighten up. But we do have underneath demand here, which we did not a week ago.
I'd agree with that. The demand is definitely there. Now the only question is, 3-day rally. Can we get a 4-day rally? No. I mean, that's where it gets really difficult on a number like this.
It's as much as it was really bad news for the bulls, when we start selling off, and it's seemingly good news. It's not good news for the bears when we start rallying on bad news. And this is bad news. Take it at face value. It's hot. It's hot. I mean, PPI X food energy is only in line. So maybe they're thinking, well, it's all oil, man. We knew oil went up. We knew oil prices went up. So this is all energy, and we already knew that. Maybe that's the silver lining read on this. I've talked to no one. I'm just thinking out loud here. But when we back out food and energy, it's in line number. So maybe, just maybe, that's what the market's reading into that they think this is all oil.
All right, Mitch, you got any details here on it?
Yeah, I'm grabbing even more and more here, and a lot of this is, of course, coming from gas. You can clearly see it in the report. Now, of course, there's other playing in here, right? You got unprocessed goods for intermediate demand saw a substantial increase, 4% in September. That's unprocessed energy materials contributing to over 70% of this rise. Increasing by 7.5. Unprocessed food stuff and feed stuff also went up 3.5%. This has a lot to do with energy, but also bringing in prices for raw milk, slaughtered chickens, hay seed, oil seeds. And so it looks like a lot of things are increasing in inflation here. It's not just energy, but majority of this run, of course, with the diesel fuel. All right, we'll see what's going on there. The price action
Year over
still
year, up
kinda hanging in there.
2.2%. I mean, there's a lot of numbers. I'm reading the numbers that you're just putting up there, Money Mitch. Again, I think the algos are reading that this was mostly oil, because we know when we're looking at the data, oil had a significant rally. We know it sold off here just recently, but that's not priced into this data because it lags. I think they're reading that this was mostly oil. Because PPI, ex food and energy.
In the report, that's what's stated. A lot of it, right?
Oil.
It came from that oil jump, right? Over 70%.
Which we already knew about. So the market says we already know that. So initial headlines, algos just hit. They're like, that's hot. They hit it. That's what happened. So we're just doing a replay of what happened the last 6 minutes. Initial number comes out. Algos are all stupid. They're like, hit, because it's hot. But then everybody logically comes in. Institutional money managers come in. I come in thinking buy the dip too, just because the mentality is back out there. So same kind of logic. But the institutional money managers also looking and saying, well, it was all oil. We already knew that. So this is still green light go. So
one thing
I actually think this is still this is why we're not selling off on this number.
I agree with that outlook, Dennis. Now, one thing that I caught in your conversation there is that you said that it was not logical for it to happen, right? I think this is where it gets more that you catch a lot of the times the psychology of the market versus what's logical or not logical. Because logical is, I see the number, it's hot, it's going down.
Yes.
But really the psychology there is, Dennis, you already know the market's already looking at this. People are already understanding that energy is higher. And so it's kind of the reverse psychology move. That's what I call this. Because really, it goes against the normal reaction to the number.
And I mean, that's where the human being, and I get this question all the time, how are you still in business, as a professional trader when you're fighting a bunch of algos? I get this all the time. I talk, I have that conversation with, a guy that did all the HFT programmer, major company, did all the HFT programming for all the big guns. And he's like, I've been trying to put you out of business for the better part of a decade. How are you still around? And I'm like, it's because of exactly what Money Mitch just said. It's, I can think, and again, maybe artificial intelligence comes into the stock market and puts me out of business. But the algos, the straight up algos do not, because the humans program them to see certain information and then trade on them. But we can read another step than the algos can do. So algos say hit because it's hot. Well, we can say, well, yeah, but we knew oil already. We already knew this information. That's not programmed into those algos that they knew this, unless they're really sophisticated. Now, can AI change that? Maybe. When AI comes in the market, maybe it does put me out of business, but there's a certain logic to it. Now, again, we've come a long way. So, how does this digest? We're starting to leak here again. It's impossible to really say that we're going to rip, roar, and rally on it, because let's take this number at face value. It is still a hot number. So I don't think we're just going to rip to 440 on this. But maybe the initial 7, 8, 10 point sell-off was unwarranted, at least initially, because we kind of knew this information already.
And also just the price action, without knowing that, the number, I saw the initial move down. And when they're bad, I mean, when they really get rocking and rolling. I remember there was a time we were up 20 and then we went down 50. I can't remember what report that was, and that really instigated a big sell-off. But you could just feel the bids out there. What it was short term. It popped, it went back, tried to make a new high, and it did it. And now it just like setting up for a battle of 4,400 right now. And as Mitch mentioned, 3-day winning streak, which we did not have one 3-day winning streak in the entire month of September for the S&P. And for you guys that follow the antiquated Dow Jones Industrials, maybe they had it. But that was our first 3-day win streak. Hold it on here at 4,400.
Lots to digest, though. And I mean, this is just more information. But the big one is tomorrow, folks. The big one, the market moving, like Blue said, this could be a non-event. He may be right. We had the initial sell-off. We kind of came back up. We're just slightly below from where we were before this number. Tomorrow is not going to be a non-event. Tomorrow is the big one, the CPI, because the PPI, we can say, oh, the Fed, but everybody and every newspaper, if a newspaper still exists, but every media company out there talks CPI. So it's going to be the talk tomorrow. So that's going to be the number.
Like I mentioned yesterday on crude, how high crude was when CPI is usually taken around the mid-month. At least that's what our speculation is, and it was in the 90s. So I'm not expecting CPI to come in light. I'm not expecting us to come down. I'm expecting us to see a little bit of a spike in CPI. Now, how will traders trade off of that? That's the question, right? We'll see what happens there. Let's go to Lima Oncology as they're entering expansion collaboration agreement with Novartis. Let's talk a little bit about this. Dennis, you've been catching what's been going on here. I'm no healthcare expert, so I'm going to kick it to you guys. I know you guys probably wouldn't say you're an expert in this area either, but let's talk a little bit about what's been going on. And of course, I'd advise you guys out there to do a little bit more research if these are your types of stocks.
Yeah, so what we have, and let me just grab the bloody headline here. Did you grab it out of the pro just so you can read the actual drug headline here, Mitch? And then I can tell you the other stuff that's going on here. So looking at it's this kidney drug. Hang on. I'm trying to grab the bloody headline, but sorry.
While you're doing that, I'll just go Novartis here. I'm just going to give you one number.
Yeah, let us know what you're seeing there.
$100 level, stalled in July, boom, got up, hasn't really been back up to this area. So that really important. Actually, it got up there late April, got up there in July, and now it's approaching it once again. Also, moving on that is Eli Lilly.
Yeah.
I was looking for
and
that
again, so here's where I got screwed up. You said Novartis, and I screwed it's Novo Nordisk is the stock, so it's NVO, Joel. So just to get the correct stock here.
Yeah,
so
that's what I.
I screwed up by telling you Novartis here this morning. It's NVO. It's not NVS. It's NVO.
I didn't even pay attention.
That's the moving. Yeah, I know these ADRs, and they're dang close to the same name. Novartis, Novo Nordisk. So
there's
company.
news on Novartis also.
It's NVO. That's got the kidney drug.
I got it. Yep.
I knew it was off the bat. That I was like, wait a second, that's not Novartis. And I had even NVS written on my sheet. I wrote it down where it's NVO.
I love how I preface this at least to tell you guys I wasn't an expert. So
yeah,
apparently none of us are here, money
you
man.
Brought in the expert. Yeah.
So it actually is Novo Nordisk that has the kidney drug. So they stopped their all these words, man. Semaglutide kidney outcome trial based on early signs of efficacy. It's, pronouncing all this stuff is really difficult. Not just you, Money Mitch. It's me too. NVO getting a $3 pop. It does trade as an ADR, meaning it is already pricing in Europe. So this information is already in. But there are repercussions here for a number of stocks. So you have a kidney drug that is kind of working here. Or appears to be, at least, working.
To cure.
This is actually good news for Lilly because they also have a kidney drug. So they're like, well, maybe the Lilly one's going to work too. That's why Lilly is up. And then the dialysis providers, the ones that treat the kidney disease, are down because, man, if you get a drug that could cure the disease, we don't need the treatments anymore. So there's some hammering of DaVita, DVA, because they're dialysis company. Baxter down 9% dialysis, and FMS, same thing, down 16% dialysis. So understanding the web of repercussions from this one trial affecting 4 other stocks here this morning. So you got NVS or NVS, I keep saying NVO, and it's because we talk Novartis all the time. NVO, Lilly up on this, DVA, Baxter, FMS down on this. That's the summary.
I looked in here, kidney disease and companies with top kidney disease kind of drugs right now. And you can see here, you got plenty of big names, Amgen in here, AstraZeneca, Sanofi, you guys, all the big companies are in this space. So definitely something that's going to affect the space today. What are you seeing on the price action, Joel?
Lilly, man, I saw that big decline, and now you're right back up. Lilly, you just got to think about that 600. It was a range. The all-time high 601.84, and 601.84, all-time high 601.61. So after a dip to like 520 in 7-8 sessions, you're right back at all-time high. On overnight news, see if you could get back up to those levels. This is trading near the pre-market high. It's a little bit different, as Dennis mentioned. Now you guys are getting me going on this.
The NVS NVO just screws us right up.
You really screwed me up. I used to have it before.
Let's just
Man,
say I don't think these will be
NVS.
our
I started
top
I'm
this
mad at
whole
you,
problem
Dennis.
today because
You're
I wrote
fired.
down, I was actually looking at NVO
I've
last night,
never
and for
done
some
that
reason I wrote on my
before.
sheet NVS, and then I'm like, and I said it to you this morning, Novartis. No, not Novartis, Novo Nordisk. It almost is the same name.
It
It
seems
sounds
like
the
it's the
same
same
when it
thing.
spits out. Yeah, and both
But
European companies.
one thing that we'll always say with these companies is the headline risk, right? And I think that that's the hardest part
Yes.
of trading these names is you never know what's the next headline in this space. Is the trial going to go through? Are they going to get a partnership? There's so many things that can happen in this space, so it's hard to catch. Let's go to a movement.
Well, just I
was,
want to say that segment was sponsored by the FDA. I just want
yeah.
to
Oh,
let you
yes,
know.
yes.
Yeah, and Rosetta Stone. Okay. we can move
Okay,
on now.
so on Tuesday, solar stocks were definitely getting the lift as solar and alternative energy stocks experienced a significant gains due to the French government's announcement of the plan to double its renewable power capacities by 2035, aiming to achieve carbon neutral by 2050. Now, one stock that was definitely something to catch was MaxN, because before the market opened, this one had already given out a cautious weak demand impacting Q3 revenues, yet it closed on a gain. It's incredible, this move.
That's the biggest key reversal you'll ever see, because that stock was down at $7 and then all the way up, and I believe made a new high and closed higher than the previous day. So I think it is technically a key reversal. It's one of the biggest ones you're going to ever see. So impressive move. All solar was ripping there yesterday, and it could have been some individual news, but remember, rates are being helped here. So when you see the bonds start rallying, they were closed Monday, rallying Tuesday. You wouldn't have seen it in the TLT because it was traded. But when you see the bonds rallying, that is actually very good news for all these beaten down stocks that not only have a lot of debt, but their clients or customers have to finance these projects. So we've been talking about solar being, the anti-debt play. As rates go up, they get hit harder because all of their clients have to finance and they're financing at higher prices, meaning they're going to do less business potentially with these solar companies. So rates come down, great for solar stocks. They are definitely inversely correlated with the TLT, or actually, yeah, they're positively correlated with the TLT, inversely correlated with rates.
And now when stocks are in extended downturns like they are now, there's always overhead supply to contend with. And but you get a catalyst, right? There's a potential catalyst here. I'm just going to focus on resistance real quickie for these issues.
Sure.
For SEDG, man, there's someone hanging out in the 127 handle. You got to mop that guy up or guy or girl, and then things really open up for that. But that's just a tight formation down there. ENPH, that kind of had a little breakout yesterday over 120. So use the next cycle, some highs bunching up at 130. We'll keep an eye on that. For solar, which had been the best in breed, that broke out yesterday above, not much in there to 160. But once again, and then the main one that you mentioned, Maxon, this is the one that you want to see is like, are they going to go 10 bid in this thing? Do they have the guts to, like, after that day yesterday, or is everyone, did they scooped it out at the low just saying, hey, I bought this at 770. I'm out at 10. I could care what happened to this thing. So we'll see if Maxim can establish a 10 bid.
The other one I was watching was SunPower, which had a key reversal here as well. This is a stock that I'm very close to my heart because it was one of those in 2020 that I made almost 1,000% on. I bought this at $5 and I sold it at 50. It was like one of my best trades ever. I took the majority of that move. I've tried to buy it a couple of times and I got stopped out a couple of times on the way down here. But we're back here at $5, and I'm like, man, not that we're going back to 50, but this was the original level that I bought it back in 2020. And I'm thinking, like, could I take another shot on SunPower here? I've kind of been waiting for a key reversal day to jump into this name because it's just been relentlessly down. And I mean, we've had key reversals in the past and they have failed. And maybe this is a zero, it very well could be. But I'm like, speculative capital only. Part of me wants to buy this SunPower down here in the fives.
Let's move over to some subsidies that are out there in France. Also mentioned there that most electric cars produced in Europe, some made in Asia, would qualify for subsidies in France. So just kind of mentioning that, I do see Tesla continuing a little bit of a lift. They've already been kind of getting these subsidies, but definitely there was a look into to see if they were going to remove these subsidies from certain kind of Asia made vehicles, and now you're seeing these continuing to get the lift. Will Tesla continue to drive higher? It had a really good day yesterday.
The debt issue obviously doesn't apply to Tesla because we've done this exercise and they're almost debt free. So they were rallying this thing earlier because they're like, you know what? Higher rates, again, a little bit, it's going to impact because, again, it's going to impact their customers because they're going to have to finance these cars. So, it's a little bit, you look at this and think, wow, it's not sticky. This is not an inelastic product. Rates go up. It's not good for them. But the market was just buying companies with no debt. And Tesla's basically no debt. Now, with that being said, we've come back up here. Joel, I'll throw the technicals to you, but there's all kinds of resistance up here near 280.
And now you are, I'm sorry, I was trying to
Tesla.
look at
Tesla.
Tesla. Oh, Tesla. Wait, you switch gears on me fast. Yeah, that's clear up to 280. Trade had a strong day yesterday, up to 11 right now. Next target for me, wow, is would be the next daily high. We're above 260. 267.85 did hit that earlier in pre-market. No, that was from yesterday. So got me off guard. 268.94, yesterday's high. What I was trying to look up was the analyst ratings on the solar stocks, and there's not a lot of them. I'm looking at some of the dates, so it's not widely followed. But what I was thinking was, do the analysts come out now and buy the dip? But they're not super widely covered. So that would be another thing, a little bit of a catalyst.
They're so beaten down. I think if the TLT can sustain a rally here,
I agree.
If we can get the TLT going, that is going to be fantastic news for the solar company. So again, TLT back to driving the bus. We had oil driving the bus for a couple of days, but bonds are now driving the bus here. The bond rally started yesterday. The bond rally continues into today. I mean, we're building on a 3-day rally here in the TLT as well. We hit $84 just 3 sessions ago. It's 88 here now. We're trying here. The bonds are trying. They're trying to prove Rick Santelli wrong, and I think they're going to prove Rick Santelli wrong.
Jamie Dimon.
That's Jamie Dimon thinking.
He just likes to say the opposite.
He just likes
to show up on the headlines, guys. The HBQ.
I think it is.
Let's go to HBQ as they shared their fiscal year 24 outlook, which features an adjusted EPS in the range of $3.25 to $3.65, slightly below the market consensus. They anticipate generating free cash flow between $3.1 billion and $3.6 billion. The company plans to return 100% of its free cash flow to its shareholders through dividends and share repurchases, including 5% dividend increase to now $1.10 per share, and some change there. But additionally, HP aims to enhance cost savings by an additional $200 million, targeting $1.6 billion by fiscal year 25, while maintaining a restructuring and other charges at approximately $1 billion.
The good news, raised dividend, that's good news. The earnings seems to be kind of, the 347 consensus. They went 325 to 365, so it went really wide here to hit it. So it's like you could say they reiterate guidance, but they went really wide. They hit the low end on that 325, and everybody's not going to be pleased. So it gets the pop last night up into the 27 handle here. But remember, we have a big whale that is unloading this stock, and once he falls under 10%, we're not going to see his sales all the time, but it doesn't mean he's not still there.
Sneaky,
I personally think he doesn't start selling something unless he really wants to get rid of a lot of it. So I think the whale is still selling. That is Warren Buffett. I think he's still selling 26s, 27s. We've seen some go off in the 25s. Seems like he wants out, and I think the stock is going to be under pressure until Warren Buffett gets out, and that could take a long time.
Or Warren is, being very, diligent, and it's going against him. He's selling part of the position, right? The street knows he brings it down under 10%. You know, this is fundamental news that may change his thinking. We don't know. But as you say, once he starts to peel out, he peels out. But I'm just looking at it from the perspective of, maybe he'll let it breathe. That's what you used to say on the trading desk when you're long a bunch of stock and
Yeah.
you're rushing out of it. You're just offers like, I'm going to take this profit. And the guy's on it, just let it breathe a little bit.
Sometimes the
Let it
best thing to
breathe.
do when you got a stock rolling for you is go have lunch.
Yeah.
No, I always say
Sometimes it's the
this.
best thing.
Yeah, let the market work for you, not you work for the market.
Instead of thinking
think
about
it's
it,
so
I got to sell
important.
this at 27. I got to sell this at 27. I got to sell
Yeah,
this at 27.
once you're in, you already did the hard work, right? Now it's time to take the money and let the market work for you, guys. This is where I feel like that's why I like swing trading over day trading, because a lot of the times I can walk away. I can go eat breakfast and not be worried too much. Am I going to get wrecked while I'm out and getting some pancakes? Let's go ahead. Let's
And just before, I just realized, I forgot, I have a small short position in HPQ. I had sold the pop last night and I haven't covered yet. I will cover today.
Oh, the old short HBQ.
I actually totally forgot when it was popping up over 27. I had it in my head and I shorted some stock, and obviously I just haven't covered it all yet. So I forgot about it. Sorry.
We appreciate the transparency. Let's take a look at gold stocks, as gold stocks are definitely getting the lift lately. Honestly, this is the hardest trade I think there is out there to understand. They even still call it a safe haven asset. Is this a safe haven asset, guys? Let's just be honest. What do you guys think? Yeah, gold.
Here's the problem with gold. I'm going to say the same thing. As the TLT starts to go up, it's going to help gold. But the biggest problem with gold is you get zero dividend, paid zero to hold it. It just sits here. And when you're in a 1% or 0.5% environment, those bars don't feel as bad. When you're getting 5.5% in your bank, it feels pretty bad to be holding gold getting zero. So, I mean, that's the biggest issue for gold and silver, is that they actually cost money to store them to a certain extent. Not much, but, there is a little bit of storage costs there. But you just don't get paid. So I think as rates start to come back down, that's actually good for gold. I don't think it's a coincidence that gold went for the people are like, what happened with gold in September? When its market's going down, it's supposed to go up. Well, no, it was rates driven though. So as higher rates were coming on the long end, that's not good for gold and silver because they're giving you zero. So it's the TINA trade dead all over again. When the TINA trade is dead, it's not good for gold and silver too, because the alternative is 5.5%.
Let's take a look at some of these gold stocks. What are you seeing here, Joel?
Yeah, gold's up. Full disclosure, I've been long the GLD for like ever, and also the GDX hasn't done. Every time it gets to 2,000, I say, "Oh, I'm going
We
to
need
sell."
to go through your portfolio one day, Joel, because you got a lot of long-term holdings in there, like super long-term holdings. And just curious. Obviously, we make fun of you for the Peloton, but you've had a lot of good ones too. So I mean, and the Peloton's a nice account. Like we got to go through one day and just see, what does Joel hold in this long-term portfolio.
No, I don't want to look, because then I'll sell it.
He doesn't like talking because he's going to sell it. He doesn't like to look. Joel, you log in your long-term account like once a year, don't you? Just so you don't sell it.
Once a year. He doesn't need the login. He knows.
He doesn't even log in it. He forgot the login. He doesn't know anymore because he forgot what the login is.
I know.
He tells someone else to change the password.
Password? What's a password? For Newmont, look at 39.11 is the next daily high, and then you work your way towards $40. That's for Newmont. What else are gold stocks? I mean, what's up?
AU, I like. Did we take a look at AU? I like that one. I love the way this one trends on the trade. So you can see this on the daily. When it takes off,
did they reorg?
It takes off. I think so.
Yeah.
They reorged, they merged, and Anglo Gold, because this used to be something else.
All right, this is Barrick Gold now, right? Instead of what the heck
GOLD
was the
is Barrick. Yes.
Yeah. What was the old symbol on Barrick?
ABX.
Yeah, there we go. American Barrick. Now it's just okay. GLD. I mean, this is like if you establish a 15 bid here, it looks like you got some room on the upside between 15 and 16. I'm going to wrap it up here for me, folks. We are coming back toward the highs of the session, of the pre-market session. The dip was bought under 4,400. You get follow through to this 4408.75. I'll be looking for yesterday's high at 44.19. On the downside here, at least for the S&Ps, if you get back, I mean, near that 4,400 area, that's where you found a bid before. Joining us tomorrow will be Mark Chaikin. I think it's a great time to have him on.
Mark Chaikin?
Yeah, it's good ahead of the CPI number. But
Yeah.
great show, another great show again today, guys. And I'll be back later on.
All right, Joel's hopping. Last words, Dennis. Anything you'll be looking at here?
I think you're going to see chop. I don't think we're going straight up here because, again, I'm still under this impression that we've come a ways here. I think there's room to 440 on the SPY. Could we buy it ahead of it? Again, this PPI number today, I'm just going to reiterate the reason they're rallying, because people are like, why are they rallying on a hot number? Because it was mostly oil, and we knew oil prices already. So nothing was unexpected in here.
All right, Dennis is out of here. You guys keep up with Triple D Trader, of course, on Twitter. We'll get you guys over to live trading. That's coming up next. Don't go anywhere, team. We got a great day for you guys and a lot more for you guys right here, only on, of course, Benzinga. And if you guys haven't checked out who's going to the Future Digital Assets event in New York, I want to hear who's out there, who's getting out there and going to go ahead and get to it. Of course, we have some great speakers that will be taking place. We have great companies that will be there also. You guys don't want to miss this. The greatest financial attempt here to get towards all these future digital assets and an understanding what's going to be there. I know a lot of people are questioning about digital assets. Well, if you want to get your answer, if this is an area where you should be investing, why not hear from the experts themselves, right? We got head of strategy, Web3, Google Cloud. We got architect, founder and CEO. We're going to Pudgy Penguins. Take a look. Luca will be joining us. We got so many speakers that have excellent experience in digital assets and institutionals that are investing right now. Why you guys should tune in, just check it out, guys. Go to the link here. I want you guys to go ahead and take a look at this and see what you guys think for yourself. I'll see you guys over at the Future of Digital Assets event. I know I myself am looking at digital assets and trying to get them on the cheap, because like always, there's waves to technology. And I don't know about you guys, but I don't want to miss the next one.